Alrighty. Hey. Hey there, boo-boo. It's time to get the pips from the pig basket. Hey, good morning. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of trade planning. Let me remind you that trade planning is risky, and trading in general may not be appropriate for you. If you are trading, your past performance, if it's good, is not indicative of future results. If your past performance is bad, that's also not indicative of future results. Therefore, please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I've been trading Forex, starting around the year 2000, 2001 maybe. Tinkered around with it. And then pretty soon it became my sole focus. I gave up venture capital because it was only, $100 million a year. And suddenly at that time, $2 trillion a day relative to $100 million a year opportunity just seemed crazy. Why would I only focus on $100 million a year opportunity when I could have $2 trillion a day? So pretty interesting how that all happens, huh? And suddenly I'm a Forex trader. Never traded stocks or bonds or options before. Walked right into trading Forex. Never been anything else. So that's pretty cool. So I learned a few things along the way, and I'm willing to share. It's why I'm here. So let me know how it can help. Just ask questions in the chat. I will do my best to address them. Also treat your other, your colleagues, I guess, other Forex trading colleagues in the chat with dignity and respect. If you're a spammer, we're not interested. If you're a heckler, go away. Other than that, check your negativity at the door, and let's get on with learning the complexities of being a trader. It's not just technical and fundamental analysis. There's a lot more going on. Today, I expect to go through the calendar and do some other checks of the market and take a look at how this week is going to shape up and really how that ties into the rest of the month and the end of the quarter. Pretty neat, huh? So that's kind of the agenda. Now, because there's so much to learn, I've only produced 5,000 Forex videos on YouTube. Forex.Today has quite a bit. So you can go to youtube.com/Forex.Today. You can also go to youtube.com/TradersWay. You can go to youtube.com/FXBootcamp, and combined you will see my work. 5,000 videos, maybe 6,000. I'm not quite sure. Most of them an hour long each. That's a lot of videos. So links are in the description below this video that you're watching now. You can also buy my book on Amazon. The link is in the description below. There's a link to free training videos. Like I said, youtube.com/FXBootcamp has a training course that's free. If you like my style of teaching, which is technical and fundamental analysis, explained beautifully, of course, then you can also go to fxbootcamp.com. There are 65 hours of training videos. And the membership that gives you access to that is $88 a year. And I am starting a new course on how to trade oil, which will include an incredibly detailed overview of the energy complex and industry, upstream, midstream, downstream analysis. We'll even go over how legal contracts are negotiated, how various countries are similar and different, and even the hardware. I even plan on covering the hardware. This makes the oil come out of the ground, and it goes to this pipe goes to that thing does this, it separates this, that, and the other thing, and nat gas goes here, and the oil and the water and the slurry goes over there, and it goes through this pipe, and it goes into that thing, and that thing goes up here, and that separates, and that goes over here, and this goes over there. And you're actually going to learn about how you get this stuff out of the ground. If you've ever wanted to know about the difference of conventional oil and tight oil and fracking and horizontal drilling, I'm going to cover all of that. So I'm putting that together, and we're going to do that this summer. Cool. Does that sound fun? So summer school this year will focus on trading the energy complex, but also understanding, having a deep understanding of the oil industry. Let me know. Let me know if that's cool. All right. And then lastly, in the descriptions below this video, there's a link to tradersway.com. They're a foreign exchange broker. You're a foreign exchange trader. There should be a symbiotic relationship between you both. You want to trade. You want to have your trades executed into the interbanking system, and to do that quickly and cheaply. And if you're owed a swap, you want to be paid your swap. And that's what happens with Traders Way. Fast execution speed, narrow spreads, huge swaps. And you're like, well, that's what I want. And that's what they offer. And it seems simple enough, right? But it's actually very, very, very rare. But don't take my word for it. Check them out. Tradersway.com. Open up a demo account. Cool. James says, awesome. Lucas is looking forward to it. Cool. Okay. Steve's like, hey, by the way, cool, Steve. Steve's like, hey, man, I'm following up on the NFP homework. What's the answer? Hey, Steve, I'm glad you're doing the homework, but I can't give you the answer. I don't know. Why don't you tell me? But don't tell me, Terrible coffee this morning. I don't know what's going on with the minions. Yeah. All right. So anyways, look, the Japanese yen is weak. Awesome. Before we get there, anywho, let's do this. Let me pop a couple of things here. Empty web. Then I pop this, which gives me the same page but without the browser now. So now I can kill that. I can go back to Traders Way. Actually, I can just kill it. And where to go? Hello, there it is. So we got, wait, that's still an MT4. I got to switch this out to MT5. Now I keep an eye on the stock market. Cool, very nice. Because one of the questions, let's make sure we understand the question that we're trying to answer right now. We've had a bit of a bottom in the stock market, you're right? We bottomed out and the stock market came up and then it came down and is trying to head back up again. Is it a dead cat bounce or something to that effect? What does that mean? That this is a rally in a bearish market. And inevitably it'll head back down. So that's what we're trying to answer today. And so I gave you a poll to complete, and we have 54 votes, so that's good. Okay, 50% of you said up, which means you think the stock market's going to go higher than where we are now. Okay, so here, this is what we're looking at. So 50% of you say we're going to do this. And 22% say we're going to do this. Okay. So let's just dumb it down. 25% say down, 50% say up. And the other 25 say neither. Okay? So that's what we're trying to work out. And right now, our deep dive into market analysis tells us, leaning towards the up. But that's a sustained rally. And the interesting thing is, every time the stock market is recovered from a big crash like the one we just lived through, okay, like this is pretty nasty, right? You get a V-shaped reversal. We're not going to have a V-shaped reversal this time. The reason for it is the Fed's not going to come out and save us. The Fed's creating the problem. In this case, bringing it down, not the real problem, which is inflation, but that was the U.S. government, not the U.S. government bank. Okay, politicians created the problem, not the bankers. But anyway, so, 50% of you say up, and I'm like, okay, that's great. But eventually, I think we need a pretty significant pullback again. And it might be slow and steady. So what I said in January, and this is May, but what I meant was it would come down, we would head back up, and then it would have a long, slow fizzle. Okay, so what we're looking at is, something like that. That's not quite right. What I said for the year would be sharp down, up, and then long, slow fizzle, and then up at the end. And where we are now is probably, somewhere in here. So there could be some more up, but it's only going to fade. That peak is probably Canada Day, by the way. And if you don't know Canada Day, Google it. So anyways, I need to watch that, trade that, watch my money. Got my mind on my money, got my money on my mind. Thank you, Maida. Can you block that account, please? Thank you. Welcome to the Wayne train. Whoop, whoop. Good morning, King. Casey. All right. RBA interest rate. That's tomorrow, aka tonight. You know what? I want to do Forex.Today on this one. Forex.Today. You are not alone. I am here with you. All right, I want to do it this way. The big events of the week. RBA interest rate decision. And I covered this last night in the day trading group. Yes, that was a plug. Very astute of you. You catch everything. What can I say? Can't fool you. Yes, what I covered in the day trading group last night is we actually went to the RBA website and we discussed how amazingly low interest rates are in Australia. But the rationale for the sort of this, it's still sort of the beginning. Interest rates are so low, but this new process of going to have to raise interest rates, and also why. Okay. So anyways, that's going to be a big deal. Okay, that's going to be a big deal. And then way out Thursday, we're going to find out that the ECB is going to stop bond purchases completely. Done, I guess. Done with the interest rate, done with bond purchases, and probably announce, I don't know how clear they're going to say it. I don't know if we're going to hear it, see it, or smell it. Smells like an interest rate, right? But they're probably going to change their interest rate as early as July. July. Okay. Okay. Anyways, looking further out than Friday. It's Friday on Friday. And what do you do during the summer on Fridays? Monster trucks. Friday. Yeah. You guys want to go to the Redneck Yacht Club this weekend? You have to Google that, Redneck Yacht Club. Anyways, anywho, consumer price index coming out on Friday, obviously a big thing. Oh, we got more spam, huh? Boy, but we're blessed with spam this morning. I guess we're popular. Yeah, it's getting blocked. It's coming in, but then, our moderators are blocking it, but we're just getting crushed by, I guess, something to do with Tinder and sex. I'm like, wow. Yeah, spam, boo. All right. Poplar. Yeah, I guess so. It could be worse, right, Darko? Could be. Yeah. Well, it's not a troll. It's a bot, and it's just popping in, spam bots. Anyways. All right. Yeah, finally some interesting advertisement. Yeah. All right. So, and then, Canadian jobs, okay, but what are we looking at? What do we care? Like, dude, why do we care? Why do we care? What's the question on the street? Well, we've talked a lot about, and I talked about it quite a bit if you attended the Trade Non-Farm Payrolls Live. What was it, 194? Gee whiz. Anyways, on Friday, I covered this at the FX Street live stream, where the real question is terminal rate, neutral rate. And I broke this out 3 years, 4 years in advance of what it means and the timing of the meaning. But that sort of begs the question of like, well, what about the now? And the now is, has inflation peaked? And we're going to take a look at this on Friday. Because if it's peaked, it changes the terminal rate. Okay? And then business models have to be changed, or valuation models have to be changed. Okay? And this has, pretty significant ramifications. For example, the stock market's down, right? Yeah, sorta. And you're like, well, wait, what do you mean sorta? Well, there's this thing called multiples. Okay, multiples have been compressed, and this has to do with some form of measurement of profitability or income, and relative to price. So prices have come down, but hardcore in the last 6 months. But has the economy changed that much in the last 6 months? I want you to think about that. The stock market has come down a lot in 6 months. But has the economy changed a lot in 6 months? And if the answer is no, then we have multiple compression. But what about the economy itself slowing down? Are there going to be job layoffs? Are companies still going to hire? Are wages going to come down? Is consumer spending going to come down? And therefore, at some point, will demand diminish? And along with it, prices related to demand diminish. And that is all predicated around the idea of, has the change in interest rates, and actually the perceived change in interest rates. It's not just that what the interest rate is today, but we all believe the Fed's going to raise by 50, and then they're going to raise again by 50, and then they're going to raise again by 50. So since we all know, then this is quote unquote priced in, or at least built into the model. Okay, so if now the model needs to be adjusted, we need to know these things. And therefore, then you can say, if there's still tons of inflation and the economy is still slowing, or is now going to actually slow, then the stock market could head down. Like, think of it. Why did the stock market fall? When consumers were buying stuff and companies were profitable and companies had tons of cash. Why did the stock market fall? It's math. The math changed because one of the variables changed. In either you could use I as inflation or I as an interest rate. Either way, I went up, so the price came down. It's just math. But now what? What about the stock market if the United States is slowing down and potentially going into recession? Well, then the stock market needs to go down again. But now some companies will be hurt a little bit and some companies will be hurt a lot. And now we actually care about whether they have free cash flow or fake cash flow. What do I mean by fake cash flow? Well, Peloton would have had cash, but where did they get the cash from? Customers? No, they were spending more on the bikes and advertising and marketing than they were making profit on a bike. So where did they get the cash? Well, they had revenue, fine. They had customers, fine. They were in expansion mode, which means they could borrow money from institutions like banks or maybe hedge funds based on that two things, continued growth and money being free. Remember when money was free? Well, suddenly now, if people doubt the growth and money costs a lot to borrow, then that company needs to get crushed. Okay? Meanwhile, other companies that don't need like, for example, Apple doesn't need to borrow money at 5%. Okay? You understand? But other companies that do need to borrow money are going to be hurt. So in that recessionary decline, that's where the stock market should come down, right? You see what I mean? So the first decline we had at the beginning of the year was just inflation and interest rates changing, and the variable in the valuation models dictated that prices were way too high. And you get multiple compression, which again is either revenue or profit or whatever you're measuring, relative to the stock price. So the stock price came down, but revenue probably didn't change a lot for a lot of companies. For some companies it did, but maybe for most it didn't change a lot. But now if customers go away, now we have another decline in the stock market. So we got to figure out when that's going to be. So these are all the questions that you should be asking. Okay. Next week. Look at next week. It's a lot of stuff. Okay. British GDP, British jobs, okay, PPI here. Usually we don't care about PPI, but again, CPI we care about, and really we should care about PCE, but we actually care about them all. But usually we don't care that much about PPI because that is a wholesale inflation that usually just gets gobbled up by the manufacturers or gobbled up by the retailers, and it doesn't get passed on to the consumer. But what you care about is when it is so high that it does get pushed onto the consumer. And because you're going to see PPI changes up and down. So like we could have a fall in PPI and a rise in CPI, and oddly enough, the PPI would be more important because what it's saying is, yeah, CPI is high, but in the near future, it's going to be coming down, and that's what we care about. Okay? Okay? So that's going to be interesting next week. Okay, but the big doozy here is the FOMC interest rate decision. Okay? Then Kiwi GDP. Then Aussie jobs. Okay? Then Bank of England interest rate decision. Then Bank of Japan interest rate decision. So the next, 14 days is epic for currency traders. Okay? Okay? Now, going back to this week and throwing in what the calendar is saying is sort of medium level stuff, you can see there's a lot of Chinese data. And this is interesting right now because China has been locked down, but Shanghai and Beijing are opening up. So that could get very interesting. Plus, what do you think about, or how do you feel, or how much do you pay attention to things like import-export data? How much time do you spend looking at this? Not just this, but all of it. Well, if I had to have a conversation and we were arguing over, let's say, the value of the US dollar, most currency traders would go blah, 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 blah. And they tell me what they think about what usually happens, normally happens, what they think normally happens. Very often there's nothing to back it up. They think they do, and I am criticizing, but it's easy to get lost. Okay? It's easy to get lost in the rationale for why things do what they do, because Forex is complicated. Gee whiz, is it complicated, right? But when we look at a country and evaluate its currency, one of the things we have to do is look at what type of economy it has and the health of that economy, right? Okay? Peter's like, it could be a mixed bag. Yeah, well, yeah, things are changing on the medium to shorter term, but maybe on the longer term they're not. But no, I know what you're saying, Peter. So anyway, so when we look at this economy or any economy, I don't care which economy this is the Chinese export data, but here's what I'm getting at. When you look at an economy, should you be a bull or a bear on this economy? Well, you want to know what kind of economy it is and then the health of that economy. So you look at something like Y, which is equal to, and by the way, Y is nominal GDP, is equal to C plus I plus G plus X minus M. Okay? This is consumer spending in this economy. How much are consumers buying in this economy? This is businesses. They invest. Companies don't go on vacation. They buy factories. They build factories. Okay, so consumer spending, business spending, government spending. Okay, and then this is, right, when you do the math, this is spending by foreigners. Foreigners, okay? Okay, so this is the economy. Spending by consumers, spending by businesses, spending by governments, and spending by foreigners inside of this economy. So that's why we say exports, okay? That's stuff leaving the economy and money coming in. But we also import stuff, and we want to get the net exports. So we're like, okay, if we're importing, then that's someone else's productivity and we're sending money away. So we want to net that out. Okay? So you do some research and you find out, what does this economy normally do? Well, we're talking about China. So in China, exporting is key, isn't it? China normally makes stuff and sells it to the rest of the world. So when I say, are you paying attention to this data? Okay, what we're talking about is exports out of China. Okay, typically this is a big number, and right now it's not a big number. Okay? Okay? Typically it's a big number, and right now it's not a big number. It's falling. Is that good? Not if you're an exporter, because there's less stuff being made or sold. Let's say, I don't know about, you'd have to do supply side analysis, but we know the factories have been closed, but you wouldn't know it in this data. All you know is people are not buying stuff from China. Is that bad? Well, first of all, if we're not buying stuff from China, okay, let's say US dollars, let's do that in green, US dollars are not flowing to China. Well, this has an important impact on what we do as currency traders. If dollars, by the way, dollars don't fly to flow to China. They flow to the interbanking system. And this could be the Bureau of International, it could be the BIS, basically, which tracks the flow between central banks. So really, money would go to the Chinese central bank and get converted into yuan. I don't know the symbol for yuan. Is it that's yen? But anyways, shh. Okay, money should normally leave the United States, go to a central bank somewhere, and get converted into the Chinese yuan, which then pays the suppliers. So what does this do? Well, this would weaken the US dollar. Remember, you're selling dollars to buy a laptop. You're long laptops, you're short dollars. So what impact does this have if China's not exporting? Well, Americans then are not buying stuff. So it's bad for China because they ain't got no money because their factories are closed, they're not making stuff, and they're not selling it to foreigners. But also that would make the dollar unusually strong because the US dollar is not leaving the country. You see? So when I go back to this, I'm like, hey man, are you paying attention to Chinese export data coming out this week? And you're like, I never look at that, Wayne. I'm like, what? Yeah, I don't trade the yuan. I only trade euro dollar. Yeah, but when you look at this, you should see US dollar strength. Because it's not leaving the United States to buy stuff from China, because you can see exports from China are falling, not rising. So how about this? Then you're like, why does this matter, Wayne? Well, because what if this starts to happen over the next couple of months? What does that mean to you? China's recovering, the factories are up and running, and Americans are spending money again on Chinese products, which means things are better than they used to be, and the dollar's falling. And you're like, oh my God, Wayne, you mean watching this will help me predict dollar weakness? Uh-huh. It's actually not predict, but it describes why the dollar's weak. So right now, the US dollar's strong, but is it? Or is it just not weak? Okay? So you should be doing this kind of research really on every country in the world. Okay? Isn't that pretty? Hey, not bad for a male model, huh? You just thought I was another pretty face, and you're like, dude, the boy's got talent. Oh yeah, this is behind a little bit, isn't it? Yeah. I was going to do this, but I forgot this one's behind a little bit. Knew why she swallowed a fly? Okay. So think of it. What you're doing is looking at like Australia, Canada, USA, okay, Germany, for example, and UK. Well, I guess you should throw in Japan, of course, right? So let's say you looked at this kind of stuff. Marina says, retired supermodel. Oh, no, I haven't retired. You must be mistaken, Marina. What do you mean retired? I'm just on sabbatical, that's all. Okay. So you're a currency trader, huh? Okay, I'm going to tell you the secret, and nobody is going to pay attention or listen to me, so it doesn't matter. It's still a secret. I can tell it on YouTube, and nobody will pay attention or care. Right? People is smart, which is great because, because of Marina, I used to say things like people is stupid. And she's like, hey man, be positive. And you're right. People is smart. Cool. All right, so here's the secret to everything you need. This is what you do. This is what you do. This is your whole thing as a currency trader. Because do we care about consumer spending, business spending, and government spending in the other economies? Yeah, in particular in relation to what policy the central bank has now and what policy the central bank will enact in the future. Okay? That's long-term analysis, but shorter-term analysis, let's say monthly data, not quarterly or annual data. But this information here, X minus M, what is it? It's the flow of capital. The flow of capital either goes into the country or the flow of capital goes out of the country. And they're not all the same, so there's no good or no bad. There's just, there's no virtues here. There's just indifference. So we're not saying good or bad. What we're saying is, if you analyze this over, oops, I just killed it. Can I do an undo? Can I please undo it? Yeah. If you looked through history, you would find at what degree does this economy import and export? At what degree does this country import, export? What degree, what degree, what degree, what degree? And you'll find like the USA, for example, tends to, import more than it exports. Okay? Big triangle in, little triangle out. Okay? Okay? Canada, for example, might be little candle in, big candle or triangle out. Okay? So on and so forth. And you start looking at these things. The next level is what is it they actually export and what is it that they actually import. Okay? Okay? Because you might find, Japan exports cars, so cars go out of Japan, for example, but they import oil. So you're like, has the price of cars changed in their exports? Like have Toyotas doubled in price this year? And or units of cars. Have units of cars doubled this year? And then what about oil? Has units of oil doubled in Japanese imports? Or has the price of oil doubled this year? And then you start doing the actual math, X minus M, and you're like, huh, okay? And then you would probably create sort of a, I don't know, some sort of score. Do you want to, is this good? Is this, well, not good and bad, but do you want to buy it or do you want to sell it? Okay. Yeah, Darko, when I see that, I do report it. I click on the little sandwich button, I hit report, and it says unwanted commercial content or spam. I hit report, and then they thank. Yeah. Yeah, I'm not sure if moderators are allowed to do that as well, but I didn't. Cool. Anyways. Okay, good. Yeah, good. Thank you. All right. So that's that. So what you could do then is do this kind of research. And by the way, here comes another plug. The day trading group did this together. Or was it the swing trading group? It was the swing trading group. The swing trading group started this type of research together. And we have a shared document, but it was mostly inspiration for, creating sort of your own and take it as far as you want. But you would say, let's call this X minus M, okay, bar, X, which would mean normal, let's say, and then actual X minus M, and then you make a decision. How much is Australia exporting and importing normally, and how much are they exporting and importing now, and is that changing? So the delta. And same thing, okay? Now maybe you like X minus M star or prime, right? Or the actual and the change of the actual. Okay. Leading to which way is capital typically flowing? Which way has capital have been flowing? And where is capital likely to flow next? So why did this suddenly happen? Do you know we were waiting for weeks for that to happen? Again, in the swing trading group and the day trading group, we talked about it over and over. Oh, it's going to happen. You just have to wait. It's going to happen. You just have to wait. You have to wait for the sign. You have to wait for the boom. There it is. And so, again, the why changes the direction. Okay, and some of that why would be if you look at China, and once again, I'm telling you, this week you'll get this type of knowledge. You'll look at Chinese X minus M. And I don't think you'll see much data this month, but next month, in the middle of July, you're going to be sitting there, wherever you sit, in the middle of July. You're going to be sitting there in the middle of July going, I wonder why Aussie dollar's so strong. That's really amazing. And then what happens? July M comes out, and July M is significantly higher. Okay, this is China imports for reported in July, probably around, what does it come out? July 7th? Does anybody know? I think it's July 7th. Chinese import data for July will indicate that this has already happened. The thing is, and this is why fundamentals are important, you need to be able to predict the future, because that's what we do. Accurately predict the future every single day. And you'll say, yeah, that explains why I'm crushing it on Aussie dollar. Why are you crushing it on the Aussie dollar? Because you're better than the best. Best believe you're the baddest. Okay. Cool. So we can take this one step. Adam says, high commodity prices mean Europe and Asia, blah, blah, blah. So that would beg the next question. Are commodity prices higher? Or are they high? Are they still high? And so, Adam, I would want you to say, well, first of all, who produces the commodities? Who buys the commodities? That's your X minus M. Somebody exports commodities. Somebody imports the same commodities. So the commodities leave one country and go to another in exchange for money. Okay? Cool. Who does what? Okay? Okay? But the thing is, are they really? So now you're going to have to do some basic research. Okay? Because they might be, they might not be. I don't know. Okay? And this is our job. So we're interested in inflation. Have we hit peak inflation? If so, then the terminal rate from the Fed will probably change. Okay? But look at this. Here, this is wheat prices this month. Okay? So let's talk about this. Oh, is it July 11th? Thank you, Denise. I'm sorry I said the 7th. Yuri says, why don't you trade options instead of Forex? 1, leverage is better in spot. 2, I collect income, not just asset appreciation. And 3, options only give you limited upside. And with trading spot Forex, I have unlimited upside. I can let trades run for 5 years, collect carry, and have higher leverage. And by the way, in America, taxation is better for Forex traders than it is for options traders. How's that? Does that answer the question? Cool. Let's go back to this. This is the vehicle I use for trading foreign exchange. Okay, so we're looking at wheat prices. This month, not up. Okay, great. So let's talk about it. Who sells wheat globally? Russia and Ukraine. Russia, look, yeah, okay, the Ukraine, yeah, but again, most of their grain went to places like Algeria or something, right? Look, U.S., Canada, for sure. Oh, for sure. America produces an amazing amount of grain. Canada produces so much grain, they can't even sell all of it. Yes, Russia and the Ukraine for sure. But, okay. So anyways, so let's isolate this. Then you have to say, what percentage of GDP for the United States does wheat represent? What percentage of GDP for Canada does wheat represent? And which one has a larger impact when it comes to X minus M? Okay? So anyways, wheat has come down. Will that impact the value of the Canadian dollar over the last, what is this, 2 weeks? Week and a week? 1, 2, 3, 4, 5 days? This might suggest over the last 5 days, Canadian dollar plausibly could have been a little bit weaker. We don't know for sure. So if you look at a smaller time frame here, okay, not necessarily represented there yet. Oops. But maybe. Okay. Now, the reason is you have to put this into context. Okay. And this is important, in particular if you're going to talk to an investor about investing with your Forex trading. People know grain prices and commodity prices are high. Well, you could say, well, actually, since March, it seems that wheat prices have peaked. In fact, we've got a double top, and we're stabilizing around 1,000. Now, normally we should be farting around, 750. So we're still, overvalued. But the thing is, have we hit, and this is what we were talking about right from the beginning, guys, have we hit peak inflation? And I want you to be able to talk intelligently and say, well, when you're looking at food prices, maybe we've peaked. We were at 1,300, we double topped, but we've settled a couple of times now at 1,000. If it breaches below 1,000, I think US PCE, CPI, and PPI will come down, and that will bring inflation down, and that could lead to a lower Fed. Sorry, this is my mouse. My mouse stopped working. Well, I don't know, a month ago. Lower Fed terminal rate. Okay. Right. Lucas says Russia exports more than 30% more than U.S. or Canada. Okay, I didn't know that particularly. But what I was saying is people are throwing in the Ukraine, and I know the Ukraine is the breadbasket of the world and all that kind of stuff. But I'm more interested in where that wheat and grain goes. But also Russia is huge. So I get it. But I'm trying to, I think the Ukraine, as far as the yield it produces and who buys it, how much does that impact our grain market? I don't know. I think it gets overblown in the media and given too much of an impact. But, I think if Ukrainian wheat purchasers that can no longer get wheat from the Ukraine need to buy it from Canada, Canada's got more than enough. Don't worry about it. We got you. Canada's got your back. You want the wheat, we got the wheat. Huh? You want the barley, we got the barley. Okay, don't worry about it, huh? Okay. So anyway, again, this is something that you could go through and look at and say to potential investors, that are asking you questions about inflation and has inflation peaked and where do you think the Fed is going to go and all that kind of stuff. Well, you can say, well, for example, in March, lumber was $1,500. By the way, I spent a lot of money in the last 18 months on lumber. That's one reason. So lumber was $1,500 and it's less than half of that now. Domestic what? Yeah. Okay. Lumber is down more than 50% from the peak. Okay. So do you guys know what I did in here? March. What did I do in March to take advantage of something like this? Does anyone remember? It was the cheapest industry in the stock market. It had the lowest prices. I bought the stocks. I bought a whole ETF I bought the whole industry of these stocks because nobody wanted these stocks because they bought lumber at unbelievably high prices, or they couldn't do their job because prices were so ridiculously high. It was crushing the industry. Nobody wanted it. It was the worst stock sector you could consider. It was the worst. Again, I bought the stocks, right? I bought these companies at less than book value, which means you add up all their assets, cash and other assets. Okay? And let's say the company had 1 billion in assets, but the market cap of the company was 900 million, which means you got $100 million of value, intrinsic value, for free. Does anyone remember how I took advantage of this at exactly this time? No? Really? What indicator are you talking about? Okay. Yeah, Zach, I'm happy to do that. Let me just finish with this. I just want to show, look, I know we're foreign exchange traders. We just want to make money, right? Like, do you really care if it's Forex or anything else? It's all to me Newtonian physics, right? Peter, right? Peter, remember, what is it? What did I do? You guys remember? Richard, of course, feel free. There you go. Inflatable boat service, got it. Yes. So right here, oops. Wow, this stupid mouse. Okay, right here, I bought Home Builders. For less than book value. Which means I got some sort of intrinsic value for free. LIBOR is built to do deck. Yeah, but I didn't use, at that point, here's what I did. I had my deck rebuilt. I was, I was keeping my local economy afloat. So yeah, I rebuilt my deck. That's true. So I had a whole bunch of workers, but then we looked at lumber, and we looked at it wasn't Timber Tech, but Timber Tech, I don't know what to call it, but the fake wood, whatever you want to call it, plastic wood. It's nicer. When I say plastic wood, it sounds terrible, but whatever it is. So typically, I don't know how to describe this. So let's say you're going to spend $100 on material that's made out of wood, timber tech or whatever type product, plastic lumber. The same equivalent would be, let's say, $300. So if your $10,000 wooden deck would cost you $30,000 plastic deck. Okay. So anyways, but when I was buying and redoing the deck, remember, I'm keeping the economy afloat. I got workers. We did all kinds of work around the house, keeping people alive. Cool. Well, at that point, lumber was $300, and I could still get inventory on TimberTech, because the interesting thing is the average person can't afford TimberTech, especially in a recession. So nobody was buying TimberTech. So this is behavioral finance, by the way. Nobody bought TimberTech. In fact, what happened was they stopped making it. So I ended up still spending a fortune on the deck, but at the same price if I had just used wood, because wood was expensive, but people were still just thinking, well, I can't afford TimberTech, so I'm going to buy the cheapest, or they didn't build anything at all. And I'm like, well, so anyway, so that's how that ended up playing out. So I still spent way too much money on a deck, but I got a better deck. It ended up being gorgeous. And you know, a PVC deck is more water resistant and all that kind of stuff. So it's kind of cool. But anyways, going back to this, I bought real estate, home builders, specifically home builders, 2 different ETFs, thinking that this would be the cheapest you could get, because those are the highest prices we'll see in a very long time. And that 5 and 10 and 15 years from now, people are still going to move to America and need a house to live in. So if I can buy it for $100 million discount from Justice Access, remember we're talking about multiple compression? What does that mean? Well, how much money did a company make this year relative to the stock price? Okay. But, okay, because it's usually like a healthy economy, maybe it's 20 times future earnings. Apple used to be 40 times future earnings. I bought these home builders at less than 1 time's earnings. Just like almost for free. I literally got it cheaper for free because, again, if I had bought the whole company, let's say I went out and I bought the whole company. Let's say I'm that big. I'm Elon Musk. I'm just going to buy the whole company. So the company, you got to think about it. I buy the company, and then I pulled it apart. Do you guys remember Wall Street? The airline? Remember when Bud walks in to the boardroom, which turns out to be his buddy's law firm? Like, really, what a coincidence. But he walks in and they're selling off the planes, they're selling off the routes, they're selling off the fuel, and they're getting more for the pieces than they are for the whole company, right? Do you remember that? Well, what if I did that? Okay, I'm Gordon Gecko now. See, I can do my hair like I can do a gecko. All right, cool. So I'm Gordon Gecko. I buy the home builder because the whole stock market is down because of this current crisis. You understand? The stock market tanks. So I come in. I'm a vulture capitalist. And I just buy the whole damn thing. Just buy the whole company. I just buy all the shares and everything. Okay, I paid $1 billion for it. But actually, I should say I didn't, right? I paid $900 million for it. But then there's cash in the bank. I just put that in my pocket. I instantly get that. But the land, you understand? The land where they were going to build neighborhoods this year, next year, and the year after, the home builders buy all this land and then build homes. They haven't, right? So I'm not counting lumber as assets. They haven't bought the lumber yet. The lumber's too high. So they put that on the shelf. And they're like, we're not going to build this year because lumber prices are too high and we can't make a profit, but we own all this land. But I can take the land, sell it for more than I bought the company for. And that's what book value means. Just as clarification. So cool, right? And so that's how you can transfer one piece of information to another. And by the way, I told everybody the exact day when I did it and why. And it's just money. Okay. Now we had a question, terminal rate, okay, and neutral rate. Let me do that. And we'll go, I'm just picking a random chart here. Ooh, look at that little setup. Sweet. You're welcome. Anyways, let's clear it up. But you see what I have here? I don't know if it'll work, but look what's happening. Ciao. You're welcome. That one's free, courtesy of the firm. All right. Blanca. Okay. We have the Fed funds rate. Wow, this mouse. Okay. We have the neutral rate. Is it neutral? And we have the terminal rate. Okay. Do you guys remember there, was it Speed? There was some movie back in the 80s, no, 90s, I guess it would have been, where there was like a bomber and the police had to get him before the next bomb went off. And he left a clue, and the answer to the clue was Grand Central Station. So they all went to where? They went to Grand Central Terminal. Because they're like, oh, Grand Central Station, Midtown Manhattan. Was that Speed? Yeah. What did that have to do with the bomb on the bus? I don't know. Anyways. But Speed was in LA, but maybe it was a different one. Yeah, okay, it's a different movie then. But anyways, they're like, when you say Grand Central Station, this is what tourists say, Grand Central Station. And they think of the place in Midtown Manhattan. But that's not Grand Central Station. That's right? That's Grand Central Terminal. What does terminal mean? So anyways, the bomb was somewhere else. The clue was it's in Grand Central Station. And they all went to Grand Central Terminal, and the bomb blew up in Grand Central Station. Different places, right? The terminal means the end. Okay? So what's the Fed funds rate now? Okay, it was 0.25. And it's rising. Okay, it was 0.5%. And then they raised it to 1%. Now there's a range, but let's not get it all mucked around, okay? So we go back to this. The Fed funds rate is 1%. What they're trying to do is kill inflation by impacting demand. So they need to raise interest rates to the point where spending cools, and because less people are spending, prices will need to fall. Now, remember, in high school, when you learned basic economics, the only reason price fell was inventories were high and nobody was buying inventories. But if nobody's buying, but there's no inventory, does it even matter? Okay. But whatever, let's not follow that, because that's logical. Anyways, Fed funds rate is 1. The terminal rate is how far will the Fed need to raise interest rates to create essentially a recession. Okay? The number could be 4, but you might argue 3.5. Now, what are based on the arguments? Have we hit peak inflation yet? This is why I'm saying this is what we're trying to answer this week and next week. And by the time we get to that Fed meeting. Well, if the answer is no, we haven't hit peak inflation, okay, yes, wheat prices have topped out, lumber prices are down 50%, but oil's up. So that's going to push up inflation. So we have to look at all the facts and then analyze them. And you might say, Wayne, we're getting close to peak, but we haven't hit peak. We might hit peak in 3 or 4 or 5 months. Therefore, we're going to still have lots of inflation. And it'll take longer for the Fed to kill that inflation. And therefore, 3.5, and we're talking next year or the year after, might not be high enough for that to occur. We might have to go to 4 because we have not hit peak. And someone else will say, no, dude, I think you're wrong. I think we have hit peak, and they might only need to go to 3.25 okay? And so now the terminal rate is, what is the rate? But also implied into this, is this June 23, or are we talking about June 24? When and at what rate? So if you're thinking inflation's not going to come down until then, you're basically saying, well, the terminal rate is actually going to be higher. Not 3.25, not 3.5, maybe 4.25 is how high the terminal rate will go. Terminal rate of what? Fed funds rate. We're not talking about bond yields and stuff. Okay? How high will the Fed raise? And why that it's helping them hit their goal of lowering inflation. Okay? They're going to cut interest rates now. Why? Because this will create a recession. At best, a soft landing, which just means a tiny little recession, where maybe prices come down, inflation comes down, the economy slows, but generally people don't lose their jobs. Where suddenly a recession would be inflation comes down, spending comes down, wages come down, rents come down, houses come down, retirement accounts come down, and people lose their jobs. And then what? Either way, the Fed says, all right, we've done what we've needed to do done. We've destroyed demand. We've destroyed inflation. Things are normalizing. So let's cut rates back to what? 2.5? 2.25? What's the target? Are they going to try to keep it somewhere between 2 and 3? Then they'll probably need this to be 1.5 to 2. Or is it 2? Or is it 2.25? Or is it 2.5? Or is it 3? We don't know. But it would change the value of the currency. So what I've been preparing people for, and by the way, We've covered this multiple times in the swing trading group and the day trading group. If you find this stuff interesting, I recommend you join, because these are discussions we've had many times. But what we're trying to figure out right now, by we, I mean the entire market, is what's the terminal rate and when are we going to hit it? And I think we're going to hit it in 23. And then when do we drop interest rates back down into here? 24. Okay, and what's happening now? So now I'm telling you, it's, let's say, I could argue, for example, that I think this is going to be 3.5. Okay? And that we're going to get there by 2023. Okay? And then hold there for a while, and then come back in 2024. And I want you to think about, how does this valuation model, okay, the present value is equal to the future value over 1 plus I, which is what we're talking about, to the n amount of periods. Okay? How will this impact the stock market? How will this impact real estate investing? Okay? And I've already made those decisions. Okay? So like when I look back and I'm thinking about home builders and stuff, I'm thinking, well, I'm going to hold it, till 2025 and beyond. Why beyond? Because I think in 2024, interest rates are going to cut and we're going to have a real estate boom and a housing shortage, and wages will still be quite high in the United States, because I don't think wages are going to come down much. So I think Apple will stop hiring, but they did hire, but they raised people's wages by 10%. You see that? Wages went up 10%, but then they're going to stop hiring. But in 2025, people will still have high wages relative to what they used to, because this year wages went up 10%. Now they're not going to go up next year and the year after and the year after and the year after, but in 2025, 2026, 2027, 2028, people will still have good jobs. They'll still have good money. There'll be a housing shortage. Interest rates would have come down. We're going to have huge demand. There's going to be a huge rally, and I bought home builders like Gordon Gekko for cheaper than the value of their assets. Do you know the last time I did that? I bought Apple. I'm not joking. I bought Apple for $6 a share, and that was less than book value. They had more cash in the bank. This is Apple, in, I don't even know what year it was, 1993, 1994, I don't know, I can't remember what year it was. I bought Apple at a valuation less than the amount of cash they had in the bank. So I can't remember what it was, but let's say they had $1 billion worth of cash in the bank, but the value of the company, the market value, you add up the number of shares trading in the stock market. You add them up at the price, number of shares. Okay? So what did I say, $1 billion? So there's 100 million shares trading at $6. What's the value of the company? 600 million. But they have $1 billion in cash. I'm like, oh my God. It was the first stock I ever bought. I learned how to multiply on an Apple IIe. I used to play video games on the first Macintosh. Okay? So anyway, so I knew Apple, and that's why I was into it, right? I had a PowerBook 135B, 440, 4 megs of RAM, 40 megs of hard disk space. Okay? So anyways, that was the last time I bought something that was worth less than the value of the cash. I could have bought all of Apple. I could have bought the whole company and just taken the cash out of the bank and then declared bankruptcy. Okay. So anyways, okay. That's our Fed funds rate, the terminal rate, and the neutral rate. And now we're projecting 2, 3, 4 years in advance. Okay. Cool, right? Cool beans? I think I'm done. We'll just leave it at that. Zach says very good explanation. Well, with passion too, right? Cool. What a great day. That's awesome, James. Yeah. All right, cool. So thank you for doing what you do. Thank you for being in my life. Thank you for helping me block the spam bots today. What I needed something was cheaper than Tinder. Does Tinder even cost money? I don't even know. But I'll have to check that out. So anyway, so thank you for helping me with all the spam bots today. I appreciate that. I invite everybody here to open an account at Traders Way. And I invite everybody here to create a membership at fxbootcamp.com so I can help you. Actually, we can help you. There's a whole community here. More than half the people in this live stream are members of FX Bootcamp, more than half. So give me an opportunity to help you. Give us an opportunity to help you because we actually help each other. We work together. It's not just me preaching. We do a lot of collaborative work. We have a lot of fun. It's very interesting. But the bottom line is we're trying to get better at being a currency trader. And so if you want to surround yourself with like-minded people, I have found it over my entire life that was the key to success. In particular, if they're driven, focused people, and that's us. That's FX Bootcamp. So visit, become a member. It's $88 a year. Like, what's holding you back? Okay. Like I said, I'm going to do a training course this summer. There will be a fee for it, and we will cover the whole entire energy complex and how to trade it. And it's an ambitious goal. I've already started on it. And I have, in fact, I have a phone call today to talk about me actually physically visiting the oil sands in northern Alberta, visiting a frack site near, it's not southern Alberta, but south of Fort McMurray, but in a place called Devon, Alberta. Now, Devon Energy is the company that invented horizontal drilling. So, let's say you have the ground here. And way underneath the ground, you might have shale. And it looks like this. And oil collects at the bottom. Okay? And then there's other pieces of ground above you and all this. Okay? And so conventional, you'd build a little well. Let's say this is an oil well. We'll call that an oil well. And you drill down and maybe you can hit something. But what Devon invented, I don't know if this is a good picture or not, but they invented the ability to do this. Cool. Okay? And then, of course, if this is shale, you can even frack that and do a bunch of things. So it'd be cool to visit a fracking site around, but actually go to, the spot on the universe, and I can picture it in my brain. I actually know where it is. I used to know this place as a child, right? So anyways, I can go to the spot on Earth where they created horizontal drilling and fracking. So, I can teach you all about that, maybe even visit and talk to the people that are actually pulling the oil out of the ground and pushing the water in and getting, fracking and cracking and okay. And then I thought, hey, I can go to Texas. Maybe I can go to the Middle East and all that kind of stuff, right? I don't know. It'd be cool, right? What is the ticker symbol for home builders? I don't recall. There was two that I bought anyway, so there wasn't one. I will tell you though, Edward, I looked at, I don't know, maybe 10 home builder ETFs, but I actually went through the prospectuses, prospecti of these funds, and most of them were not actually investing into home builders. Even if they said this is a home builder ETF, you go through the prospectus and they're like, dude, they're buying Home Depot and Lowe's, and I'm like, dude, that's not what I want. That's retail. Oh, they're buying paint companies. I'm like, no. I want the guy that puts a nail into a piece of wood. I want the home builder. So anyways, it took a lot of research. Okay. Because I want to invest into land. So it's an asset-backed, right, loan or investment, if you will, right? And then, of course, the future of converting the asset or improving the asset. So I wanted to have an asset-backed purchase, which is land. And then at some point, the home builder is going to say, lumber's come down 50%, but demand is still out there for houses. So we'll start building projects, which, take 3, 4, 5 years to build. But what they're doing is improving the land and then creating cash flow, because they start building phase one, they sell phase one, they get cash in the pocket, and I get me a dividend. Plus now there's positive cash flow for the company and the value of the stock goes up, and I bought on the way down. Oh, is that right? Leduc, yeah. Yeah, that's not far from Devon. You got to go out of Devon and then head that way and go to the other, the other entrance. And Leduc is out toward the airport, I think, right? Yeah, cool. I didn't know they had one there. When I was a kid, I didn't want to go to any museum yet, right? But now I'd find that fascinating. Maybe that'd be a great place to shoot some videos and some training videos. Yeah, cool. Thank you for that. Okay. Cool. So with that being said, I actually need to set up a phone call today with the vice president of an oil company. That's what the Wayne do, because I love you. And I hope that would help. So once again, for probably the third time, peace on earth. May the pips be with you. May our profits be above average. That just happened. Cheers.